So how does your credit play a factor in your car insurance? Well, there's something called an insurance score, and we're going to talk about that today on how you can calculate what your insurance score is, know the percentages that are affecting you, and how you can correct that as well. Hey guys, I'm Mark with Think Insurance, and we're here to help you save time, money, and everything amazing on your insurance. If you guys get great value, I'd love it if you hit the thumbs up. That helps me the most. Subscribe if you want more. Don't forget to turn the bell icon on. And if you want, there's a new donate button. It's called Super Thanks. It's down there below, so feel free to click it. So an insurance score is a little bit different than credit because credit is your ability to repay debt. The insurance score is a mixture of that, but also it's a mixture of what they call a CLUE report, which is your driving history. They mix those together, and what that turns out to do is they pool you just like they do in zip codes. The common zip codes have common accidents. They do the same thing with people of similar insurance scores. And they're able to determine the likelihood of you compared to the other hundreds of thousands of people that they can see of the likelihood of you having a claim. And that's why most to all states, there's about 4 states that don't allow you to use insurance scores, but most of them do. They're taking into consideration past accidents. That's called a CLUE report, and they're making sure that all of your driving history is clean. They go back 7 years. They don't rate you in insurance typically past 3 years, sometimes 5 at the most, but the CLUE report will pull 7, and that's going to be mixed into that insurance score, so it technically will affect you a little bit. The older it gets, the less they care about it. That score is ranked anywhere from 200 to 999. It's just like a credit score, and there's different levels, which we're going to go over here in just a moment, that will determine the amount and the price bracket that you're in, or the pool that you're swimming with others, and it's going to determine those pieces. So the levels that you're going to be looking at is under 500. That's considered the poor insurance score. Anything below that, you're not going to see a huge gap or difference in price because it's just 500 and below. If you're the 501 to 625, that's considered below average, but it's not far from being okay because the most common one that I see is the 630 range. So in these articles, 626 to 775 is the common. That's your average insurance score, and then 776 all the way up, just like the other way. It doesn't matter if you have 7, 800, as long as you're above that 776 mark, you're gonna have a good insurance score, and you're going to get similar or the same pricing. Now, each company ranks these differently, so it is just like your vehicle where they have different safety factors, and Progressive versus Geico versus State Farm versus Allstate, each of them have different risk levels because Progressive may have more claims on Volvos than Allstate does, and Allstate may have less accidents than certain types of vehicle. Same thing with insurance scores. So they're calculating their risks within their companies according to the guidelines. Now you may be wondering, I mentioned 4 states that don't typically do it. They say 5, but technically the one that they're talking about is Michigan. They do technically count the insurance scores, but they say they don't. So that's kind of a caveat. You've got California, Hawaii, Massachusetts, and New Jersey. And then I forgot that they actually said Washington as well, and then kind of Michigan. So those are the states that they said that they don't want to rank insurance scores. So if you're in one of those states, you can know that you're not likely going to be in this pool of having to worry about your credit or insurance score. So out of all these articles, Value Penguin gave me some good information. They have an infographic, and they used Geico versus State Farm to show the difference between how one company ranks over another. And then they went through each of those categories, which we're going to go over, and they showed you the different price range. Now, this is a typical 30-year-old in Texas. This is the data that they're using. So if we go with Geico, on the lowest end, if you have the worst insurance score, you're paying $2,543 per year on average. Versus State Farm, who heavily rates insurance scores, they're $5,511. Huge difference. So that's the State Farm versus the Geico in Texas. Now you go a level down, the poor insurance score is 5,088 versus 2,543. Once we get closer to that middle line or that average score, you're 3,269. So you see it jump down pretty heavily. And we said that level, so to be in that level, you're right around the average. So the 600 to 750 range, you're going to be at that better pricing model with those companies. With Geico, it wasn't even $100 away or close to $100 away. It was $2,417. But once you get into the better scoring, the good and the excellent, you're $2,900 with State Farm, $2,297 with Geico, and then the excellent, you were $2,311 with State Farm versus $1,872. So ultimately, they had Geico as the winning group in this. I wouldn't take that to heart too much because we are using the 30-year-old person, where State Farm does better when you go above that age range. So once you're 40s and your 50s, State Farm will probably give you a better deal, even though it looks like Geico is crushing them right now. There are third-party pieces like Equifax and TransUnion and the Experian. So there are third-party companies that do insurance scores, but most of the time, I would say almost every time, it's something called LexisNexis. If you need to dispute your insurance score for some reason, somebody drove your car, it somehow ended up on your record, and that's affecting you, then you can go to LexisNexis, call them, go online, and dispute that type of stuff. They're essentially pulling that CLUE report, which is showing claims and history of that. They don't care about the motor vehicle report, the MVR, which is tickets. That doesn't play a factor in the scoring, but it does play a factor on your price for the insurance. Now, according to the NAIC, which is the National Association of Insurance Commissioners, that's like the official ranking and the place that you're going to go to, they have a ranking system where they give out a percentage of what you should be looking at. So for those that are looking at an insurance score similar to credit, your payment history plays the largest factor. It's 40% of the insurance score in most cases. So your ability to pay bills, make sure everything's paid and up to date, that's going to play a huge factor in determining that score. The outstanding debt is the next one. That's 30% of the factor. So if you have long-term student loans and you're in collections for certain things, then that's going to hurt you just as much. Your credit history, the length of credit, also similar to your credit score, plays a factor in your insurance score. That's 15%. So the longer you have credit, the better it is. Don't close your credit cards, keep them open, keep all of your lines of credit open, because it helps you as far as your insurance score just as much as it does in your credit score. Pursuit of new credit is 10%. So opening up new accounts, trying to get a car loan, trying to get a mortgage, all of those new accounts show that you're actively looking to spend money, and that's going to raise some small red flags that's going to hurt your insurance score as well as your credit score. So like I said, it's very similar. It's the main thing is that the percentages of ranking is different with each company, along with the CLUE report of your driving history is mixed in with that. And then the credit mix is 5%. The last piece is where they mix in the different types of credit that you have, whether it's a student loan, a secured loan versus a credit card. There's different risk levels at different credit levels. And so they're going to have a small ranking on what type of credit that you have. So how do you improve this? It's very simple. You just follow the same guidelines. Try not to file at-fault accidents if possible. If you have to, they're there. If someone else is going to file them anyways, you might as well start a claim as well and just join on the back of that. But if you have not at-fault accidents, that's not going to affect you as much versus at-fault accidents. If it's $1,000 and you have a $500 deductible, it might be worth it to pay the additional $500 to overcome not losing the cost of that claim and your insurance raising up, but affecting your insurance score. What typically triggers a company to check that score is when you've had claims or tickets. They'll rerun that score whenever a major change happens, and that's part of the reason you see sometimes the rate goes up. If you've ever gotten a car, added it to your policy, and then all of a sudden the rate just seemed like it went up way higher than it should have, it could be not just the car, it could have been that Effect made a change that was allowing them to rerun that insurance score. And because that was reran, you could have had a little bit of a dip, and that could have affected your car insurance cost mixed in with that. So what do you do at this point? Your only option is to really shop around, because if that insurance score affected you there, once you saw the Geico versus State Farm, you might not be a fit for that company anymore. So you may need to check some other options. I'll put some links below in the description so that you guys have some options of some places that you can check out. Keep all of your accounts open as long as you can, because that's going to help you. Ultimately, the credit cards that you have, try not to do them right away if you're getting new insurance. If you're going to shop, if it's best if you shop first and then open the lines of credits and then do all of that. I don't think that's going to play as big of a factor, but it does. If you think your insurance went up or your insurance score went up and you want the company to rerun that, just remember you have to actively ask them to do that. Typically, a company won't necessarily just do that. They need to have a triggering event to do so, which usually is in the negative, and they want to see what's going on with you. Who are you now? What has changed in your life? Are you a fit for them anymore? So if you think you went in the opposite direction, then you can typically once a year request them. Sometimes it's in writing, sometimes you just have to call them, and then they'll rerun that score. It takes about a day or so, and they'll tell you, hey, great, we got a better rate for just you having a better insurance score. Keep in mind, these are not the only factors. There are a ton of ways to get discounts. So if you feel like this is affecting you, don't get down. There's a bunch of ways. I'm gonna link some videos in here that you guys can watch that will help you overcome a lot of these objections or issues that you're having. Don't forget to hit the bell icon when you subscribe so that you don't miss the future videos. There is the new Super Thanks button that I turned on recently. I just had somebody donate $10 to the channel. I appreciate that. That helps a lot. If you guys want more advice, leave comments below if you have questions. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.